Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I just wanted to share this video clip with you. I'm going to share my screen, and I want to share this video clip with you to debate with Barry Habib, talking about where interest rates are going and the reality of the situation. Now, again, this is what's likely. Anything can happen, come out of left field. A lot of uncertainty right now in the markets and all that. But let's take a look at some of the reasoning here, go a little bit deeper into this. It's about 7 minutes long, but for those who are interested in the details and what's coming and want to be ahead of the curve and want to save themselves some money, here you go on what's coming with interest rates. Okay, I'm going to go ahead and share my screen here with you. Give me 1 second. Okay. And here we go. There we go. Okay.
You're saying that mortgage rates are going to come down. They have to come down because inflation.
Barry, some people will say you're talking like a mortgage broker.
I'm not
a hell of a good one. You were with GMAC National Sales Director. The last time you stopped doing loans was 07. You're like one of the greatest LOs that we've had in the market. So a lot of time when realtors or loan officers say that, you're in the space. The counter argument to that would be, okay, we saw what happened when we made money pretty much cheap for 12 years. And then we try to get off of it. It didn't work for us to do that. And right now, some will still say a lot of properties are overvalued. The amount of how much home values have increased compared to income has increased. It doesn't match. The saving doesn't increase so people can't afford to buy a house at today's price.
I have a chart for that to show you that it's a little bit of an interesting scenario. It's not that right now the affordability is worse, but the affordability will improve though, Patrick. There's how? Okay, a couple of things. First on this
isn't when you say affordability, forget about the charts for a second. Isn't it when you say affordability will improve
this year?
Okay, so you know what that means to me. That's a very nice way of saying you're about to lose equity in your home. Your property value is going to go down.
I think that actually we probably will see about 3% nationwide appreciation this year because the level of inventory, it's just so tight. We saw already in January when rates dropped to about 6%, that there are multiple offers around the country.
I'm not seeing that though. And I'll tell you,
in January we saw it, but I'm slowed down.
But I'm going to tell you from a buyer standpoint, I'm not seeing that. From a buyer standpoint, I'm not seeing that. I'm seeing from the buyer standpoint, minus 500,000, minus 1 million, minus 200,000. They lowered it by another 299,000. They lowered it by 300,000.
No, well, I mean, I don't know. I mean, always will be specific instances. Obviously, you're right on the specific instances. But if you go by the numbers, let's just say from the FHFA or from Case-Shiller, the seasonally adjusted numbers show that real estate values from the very peak after 121 consecutive month rise are down 1% from FHFA, 2.7% from Case-Shiller. Those are the numbers from Case-Shiller. Those are the best two sources that
you know what a seller will say? A seller will say, Barry, I hope you're right. But how come I'm not getting any offers of qualified buyers today?
Because
I hope you're right.
They're hibernating with 7% rates, but that's why this is so important.
But you can't, for you to say, guys, let's lower the rates, it's all going to work itself out. That's the problem. The problem isn't for the Powell is sitting there saying, I get what you're saying, Barry. I understand what you're saying. A lot of loan officers are getting crushed right now. A lot of realtors are getting crushed right now. I get it, but I can't do this right now.
But he doesn't control mortgage rates, Pat. He does not. The mortgage rates are going to trade and follow inflation. Long-term investors, the short end of the curve, 100%. All the short end will follow them, but the long end of the curve won't.
So that's fair, but that's kind of like my kid saying, Dad, trust me, I'm going to read 100 pages this week. Let me play iPad on Monday. I'm telling you, I'm going to read 100 pages by the end of the week because I'm going to read it. Just let me play iPad on Monday. I'm like, no, that's not how life works. First, read 100 pages, then I'll let you play iPad, right? First, let's lower inflation, then let's lower.
That's why it's so important, because inflation on a year-over-year basis, it has been stubborn because the comparisons from shelter have propped it up, but also the comparisons from where we were a year ago were relatively high. If we take a look, date that you should be circling is May 10th on your calendar. That's when we get the inflation data. That begins a string of information. May 10th. Okay. A string of inflation data. So that will be lower, replacing higher inflation data from the previous year. It will bring the year-over-year numbers down, and we'll get the shelter.
Barry, trust me, everybody wants you to be right. I'm not sitting here saying I don't want you to be right. I want you to be right. But the market is seeing other things. The market right now, when it comes down to buying car, the national car payment right now is 911 or 920. Just 2 years ago, it was 5 freaking 75. How the hell is the average American able to go to that? So rates on $1 million loan 2 years ago, the payment was nothing. Today on $1 million loan at the rates that I'm getting, if I got a 750 credit score, if I can show everything, it's nearly 50x higher. These are
And income is not increasing.
No, income is.
by 50%.
But it doesn't have to because you don't use all of your income to qualify for it. So a couple of points. Income, according to ADP, went up 7.2% year over year.
Car payment went up nearly 100%.
You're 100% right. I agree.
College is 500%.
Guys, I agree with you. I'm not disagreeing with you. I'm not disagreeing with you. It is less affordable. However, in an equivalent state of affordability, you had 20% appreciation. I'm saying 3% appreciation, and predominantly due because you have such unbelievably record low inventory. There's 578,000 units for sale in this country.
I tell you what, here's what I'm going to tell you. You're so good. I'm going to do my next refinance with you. Okay?
I don't do loans.
I know you don't. I'm saying, this one you may want to do. It's going to be a decent one, but no. So, you know,
Barry, are you getting nominated for another Crystal Ball award? Or how does this work?
Look, let's see what happens, right? Great. So look, nobody knows for sure. Of course, could I be wrong? Of course I could be wrong. However, to me, when I look at something like this and I say, okay, it appears that inflation should be coming down. Historically, mortgage rates or all loan rates always following what I hope happens with Jerome Powell. I hope he doesn't break. Okay, that's my fear. I hope he doesn't break. You know what I said today on the call when all these guys are saying, well, Patrick. I said, listen, is it fair to say that a crisis happened last week for the economy? Yeah, it did. How the hell is the market up on Monday? Tell me when in your life something bad happened in your life and you got rewarded the next day. Do you realize how that makes no sense? There needs to be, if I don't go to school, like it's kind of like me going to school and I skip 2 weeks straight. I don't even go to class. I don't know what my homework is. Hey, Miss Taylor, how are things? Well, Patrick, great job because your grade went from 72% to 91%. They're like, how the hell did my grade go up? I didn't come to school last 2 weeks. That's what's going on right now. This is where the average person watches the market and says, I got to tell you, man, this is exactly why I want to have nothing to do with finance. I'm going to go freaking be a construction worker. I'm going to go be a general contractor. I'm going to go be a plumber. Forget the stuff here. So you mean to tell me the 16th biggest bank in America goes out of business, and on Monday, rather than people panicking, they say, yeah, that makes a lot of sense to me.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast,
Okay, guys, so there's one clip. I'm going to be sharing some more with you from that. It's a pretty long interview to get into a lot of other stuff. I just wanted to kind of get the Barry Habib clips and some of the other minor clips there, but we'll be bringing you more of this as we go along. And I'll be putting them together for you over the next day or two or three. And we'll be going from there. I can tell you anecdotally right now, rates are down, just like we talked about, you know, when we hit a rough patch or we go into a recession or worse than a recession, housing market does well. Now, again, 2008, you know, that was different because that was due to the high over inventory and then the which led to poor lending practices to unload those builder properties. But that's not where we are today. And although, you know, I'd be more worried about something like, China and Russia putting together a whole new currency and almost like a whole new order in the Eurasian landmass areas. That's what I'd be more worried about right now, and the dollar taking a hit that way. So now more than ever, knowing that when the economy goes bad, rates go down, housing does well. For the most part, because more people can buy, even though a lot of people do go out of work, of course, which is horrible, but more people that are working that can't afford it buy homes. That's just the reason and why. And with the low inventory we have across the country and in the Phoenix area, we're set to do well there. And that's basically the bottom line as far as this stuff goes. And I would just be, more worried about having those hard assets like real estate that are going to be worth something, no matter, what happens with the dollar. Or that's why a lot of people are going into, things like gold and real estate right now, that understand real estate right now. And that this is a good time to buy. Why? Because last year you had all the competition. You could, people were skipping, the last 2 years or whatever, skipping inspections and appraisals. Now, it's starting to get very busy, anecdotally, and what we see going under contract, no doubt about it. But you can still, get a property under contract. But when those rates drop even more, and they dropped quite a bit this week. So if you wanted more information on that for refi or purchase, let's talk, because now with the shift in the market and the prices being adjusted out of the crazy anomaly market, we're still up overall, but they did slow down a bit, and they did drop about 14-15% in the Phoenix area, for instance, as an example. But we're up over 30% overall. So we're still up. Okay. And the whole idea here is to kind of, make sure you have these different hedges, these different hard assets, beyond just putting your money, and dealing with the stock market, or even when the stock market and the bond market get hit at the same time, which is what's happening with the inverted curve, like we've talked about before, that Barry's talked about, and we've kind of shared with you. That's when, we really got to do a little bit more critical thinking here, and those hard assets like real estate and gold and silver make more sense. Okay. So guys, again, I'm not a financial planner. I'm not a tax guy or anything like that, but I do understand these data points. I understand history. I know how to think critically. I don't, I don't like what's going on, with a lot of things the Fed have been doing or slow to the mark on, or, what the Federal Reserve does. But, for that said, I think we're seeing that in the real, and this is another clip I'll share with you another time, in the real unemployment numbers and things like that, we're seeing, unemployment is definitely gone up. So guys, let's we'll share another one with you here. If you have any questions, let's talk. I would love to be able to get into this in more detail with you, or answer any of your questions you might have about a home purchase, a home sale. We have loan officers that you can talk to, and see if they are a good fit for you and your situation for, a home purchase or refinance, cash out refi, HELOC, reverse mortgages, anything like that. You can always reach out to us here at 480-788-8569. Check us out at mincolagroup.com, mincolahomes.com. And you can always email us at home@mincolagroup.com. We'll talk to you guys next time. Thanks.